Hi everyone, my name is Simon Mishevich from Optimize Accountants, and in this video we're going to be talking about income tax rates in the United Kingdom between 2023 and 2024. If you're looking for free online tax calculators in the UK, look no further than our website. You can use the QR code or the link in the description box below. So a UTR. A UTR stands for Unique Tax Reference Number. So UTR, do you need one? Which is used to help you submit your self-assessment tax returns to HMRC. So UTR just allows you to do that. Well, you'll need one if you're self-employed or have taxable income in the United Kingdom, which requires you to do a self-assessment tax return. If you're a company director, so you have a limited company in the United Kingdom, you're a director, you'll need a UTR, do self-assessment tax returns. Or you're an employee earning more than £100,000, you still need to file a self-assessment tax return to HMRC, irrespective if you have other forms of taxable income or not, or you're not even a director, just an employee. Say just, but you know what I mean. Make sure you get some tax advice using that QR code. Also, the link will be in the description box as well. So tax residents, let's think about this. So you may need a UTR if you're a tax resident. If you're moving to the United Kingdom, you'll be tax resident if you've been in the UK for more than 183 days, or you've worked in the UK for more than 365 days, and that straddles different tax years. You hold a UK home and you've lived in that property for 30 days out of the last 90 days, then you will be considered a UK tax resident. Do you need a UTR? Do you need to file a self-assessment tax return? Not always. Make sure you get some tax guidance about what your requirements are. Again, there's a QR code, the link in the description box below for some tax advice. Let's talk about the tax-free amounts first of all for UK. If you have taxable earnings of 12,570, then you will get that tax-free. You could also earn an additional £1,000 worth of dividends, so 13,570 would be tax-free. There are other tax-free amounts as well for interest. There are tax-free amounts for self-employment as well, but I'm just going to focus on income tax rates and dividends for now. Basic rate taxpayers are anyone that earns between 12,571 and 50,270. Income tax, you'll be paying 20%, but unless it's on normal form of income. So I'm talking about self-employment, I'm talking about employment income, that kind of thing. But on dividends, it is less. So if you have UK shares in a UK limited company and you're paid dividends, then you'll be paying the 8.75% rate. So it does encourage investments, basically. You could be moved as a higher rate taxpayer, someone earning more than 50,270 to the 125,140, and you'll be paying 40% tax. Anyone that earns more than 125,141 will pay 45%, and you'll be known as an additional rate taxpayer. Now, when it comes to dividends, the tax band does increase from the 8.75% or up to 33.75% as a high rate taxpayer. And again, earnings between £50,000 basically to 200 to 125. And then finally, there's the 39.35% tax rate for anyone earning dividends above the £125,000 earnings. There are some tax tips that you should deploy. The first of all is utilize your couple's allowance. If you're married, you've got assets between you, think about who should hold those assets and therefore who should be paying taxes on it. Make sure you have separate bank accounts for each spouse to make sure it's clear. The next one is use a domestic company. So in the United Kingdom, could you have a UK limited company that holds assets, that holds your trade businesses instead of you personally, which means you could pay less tax. Corporation tax typically is less than standard income tax. Use foreign companies. If you're a foreigner and you're moving to the United Kingdom, you might still want to use a foreign company for your foreign investments, or indeed for some of your UK assets as well. You could use a remittance basis. If you're moving to the United Kingdom, this could be an option for you, whereby you're only paying taxes in the United Kingdom where you bring the money into the United Kingdom. If you leave money offshore, then there is potential for you not to pay taxes on those amounts. Make sure you get some tax advice on that one. If you are moved to the United Kingdom or you are a UK property investor, then feel free to contact our mortgage broker to get the very best rates on your mortgage buy-to-let investments.